Hey everybody, Alyssium here again. Got another video lesson for you. This one is going to be focusing on green to red moves and red to green moves, and I'll explain a little bit about what that is. So essentially, when you're looking for a green to red or red to green move, they're based off the previous day's close. So whatever the price is when the markets close at 4 p.m., the sort of after hours and pre-market action are completely irrelevant when it comes to these plays. You can still use the after hours and pre-market sort of action to establish, some sort of supports, potential profit-taking areas, depending on the volume. But if there's no relevant volume, you can pretty much ignore any of that kind of noise between the after hours and the pre-market, because what is actually causing these plays to work is to do pretty much entirely with the previous daily close. So the previous daily close a lot of the time will act as a pretty strong resistance or support depending on which side the stock gaps up on or gaps down on. So a gap up would basically mean that if you're, say, closing at this 268 level here, and then after the after hours action, if the price opens higher, so when it first opens at 9:30, that would be a gap up, and if it opens below the previous daily close, that would be a gap down, and that would show whether the stock is red or green on the day. So let's get into this a little bit more. So I got this stock GOVX here. This was a monkeypox play, so it's been pretty hot recently. There's been quite a lot of volume. There's been some news moving it around. Obviously, like I've mentioned before in previous lessons, mostly you want to be focusing on where there's volume and liquidity. So this one here, we have a previous daily close on the 3rd of August here, where it closed at about, I'll zoom right in here so I can be nice and exact with it. This was the last candle before the close. I'm looking at 5-minute candles here. It closed at about 270. So the following day, after all of this, after hours pre-market action, the price actually opened down. It gapped down to, about 250 here. So about a 20-cent gap down, which is actually relatively significant. This means the stock is opening down about 10%. So as you can see, there was this tiny little spike up towards the previous daily close, didn't manage to do it, and then it sort of chopped around. There wasn't really much volume, so it wasn't really able to do a whole lot. As you can see, it kind of chopped, and then there was this huge volume spike up towards this previous daily close. So I'm going to put a bit of a line here, where it pushed through, got this large upwards move through, pushed another sort of 50 cents through this area before pulling back close to this previous daily close and then extending further. So as we've talked about, very simple kind of stuff. This previous resistance, because the previous daily close often acts as a resistance or a support depending on which side of the market the stock opens on, pushed through, came back, did a bit of a retest near this area here before going higher. So for this particular type of play, because there is a huge amount of volume and momentum that came in, you can see on this candle here, there was just a massive amount of volume coming in, pushing up towards this previous daily close. What often happens with these stocks, and can happen with crypto coins, so this is more of a stock play, less common in coins, but it does happen. You'll see them go from red to green and then continue from there, because basically what's happening is a lot of people who are trading are using stock scanning software, which is showing stocks that have big volume spikes, showing things that are green on the day, because if something's green from the previous daily close, that essentially means it's in a bullish trend because it's up from the previous day. It's the price is up again, and if you have, consecutive days of the price going up, that's where you get bullish momentum from. That's what you're looking for as a trader if you're going long. You're looking for bullish momentum. And if you're on the short side and you're wanting the price to go down, you're looking for the opposite. You're looking for multiple red days. You're looking for the price to show a trend of going down. So if you have this move where it looks like the price has gone down and then suddenly it's gone green, giving you another consecutive green day, this is where you often see a lot of buyers starting to jump in and push the price higher. So you could be buying this, close to this level only because this has this much volume. Generally speaking, as I've mentioned before, you want to be waiting for retests and confirmations. So the safer way to play this, obviously, is to wait for a pullback from this original breakout above the previous daily close and try and get as close to the daily close as possible to use as your risk level, because, as we've mentioned before, this resistance has now become support. Now that it's become green, the buyers who are causing this momentum want to keep this bullish momentum going. So they'll be trying to keep the price from going red again. They want the daily candle to be green. So that's how you end up getting this continuation onwards as more and more buyers pop in. They see this as becoming a nice bullish trend. They want to push the price higher. So that's a very simple explanation of a red to green move. Now, this stock luckily gives us a pretty good idea of both. This has both a red to green move, and then pretty much the next day, well, not even pretty much, the next day it does have a green to red move. So I'll go in here and you can see the price closed right here. This is the last candle of the day. It closed at about 356. So what we had was this big move where it went green on the day here, right in this morning spike. And after failing to hold green, it went red on the day. And same thing, you're looking for this previous daily close as your important level, went red on the day, you got your retests, great entries here as it failed to go green, dipped more, so you could be taking profits, and then it gives another opportunity even. The volume is quite low compared to the morning volumes and this breakout volume, so you wouldn't be expecting it to push through this resistance level of the previous daily close because it just doesn't have the momentum to do it. There's just not enough volume. So it's pushing up and you could be shorting into either of these two spikes, these failures of it going green again, showing that now the bears have control. This is now a bearish chart because instead of having, your bullish momentum of it having multiple green days, it's now gone red. So instead, it's the complete opposite. You see that now people are trying to drive the price lower. All of the bears are stepping in. They're seeing that this price has gone red for the day. It's now a red daily candle, and they're going to want to drive the price lower. So this is a pretty clean example of both being able to play the red to green moves and also the green to red moves. So once you've been able to master these two plays, you can really see how much momentum happens when it comes to these kind of plays. A lot of the time, these previous daily closes are going to be some of the most important levels you can look at for support and resistances. Even with all the noise of other levels here, like these levels up here, obviously still relevant levels because you can see that that's where it topped out. You got this, double top up here where we had this high volume. It couldn't push through this level. Couldn't push through this level again, couldn't push through any of the, pre-market after hours and the lower volume times either. So this was a very significant resistance level. You got this double top and it failed to go. And as soon as you had this failure to go any higher than the previous day, we had it go red. And that was the end of it basically. Because ever since then, it has not been able to reclaim that price. So that was the end of that. Once you have this change in momentum from, multiple green days where you're having these red to green moves and people are trying to buy it up as it continues to go up. The momentum shifts, and a lot of the time, once the momentum is shifted, that's where it'll continue until there is a break of trend. So if we'd had, a day where it had another red to green move, maybe it would have pushed higher, but that just never happened. It just, gapped down, pushed down further, ignore this pre-market action, as I keep saying, because you're looking at the previous daily closes. Most of the time you'll only be trading during these hours anyway. You don't need to be trying to trade for the extra 10 hours of the after hours and pre-market. Just focus on the actual trading day. So, gap down, same kind of thing. Gap down. I mean, here you did have a strong red to green move right at the open here. And you could have played this because there was the huge amount of volume. As long as you were conservative with taking your profits, you could still have been playing this. You can see that it did try and hold green for a short amount of time, but there just wasn't enough buyers. So, a lot of the time these things do collapse, which is why I advise you to be taking profits into the, largest part of the momentum. It's important that you're not always just trying to hold these forever. If you're taking 10% of the move here, that's plenty. You don't need to be perfect. You just need to be managing your risk. Taking the most predictable parts of the move, and that's the most predictable part of the move, is when you first have these breaks, the first retests of the breaks. That's where you need to be focusing, because every single time, imagine a lot of the time these kind of plays, especially these breakout plays, is a bouncing ball. Every time it touches these kind of resistances, what happens when you bounce a ball? You get this reducing momentum where the ball gets lower and lower and lower. And a lot of the time, then you're just here. And this is not what you're going to be trying to trade. You don't want to be trying to trade here. You want to be trying to trade here or here, trying to get these more important, bigger bounces, more predictable bounces, or more predictable breakouts. So focus on the first parts of the move. If you fail to get in on those first parts of the moves, don't worry about it. Don't try and chase them. There'll be more of these setups. They appear again and again and again. So just focus on trying to take the most profitable parts of these moves. Look at a couple more charts, just to give a couple more examples on this one. This is FGI. So we had this previous daily close here. As you can see, we had a big gap up, and then I'm looking at hourly candles at the moment. After this big gap up with this big volume, failed to go any higher. It did try and hold this level here, the previous daily close. Had a bit of a bounce, so you had, a 10% bounce. Like I mentioned, you can try and buy these bounces if there isn't a huge amount of volume, because this is a key level, these previous daily closes. A lot of the time, the bulls, if they want this price to keep going higher, this is where they're going to be trying to protect the price. You had this bounce, and like I said, with the weaker bounces, it failed on the second attempt, and you had this big crack through this previous daily close area. You could have made 50, 40, whatever it is, depending on your risk reward on this bounce here. And then you even had another bite at the apple. As it came up, you got this secondary bounce, but in reverse now. So you had this retest where you could have been short selling here using this 5 cents a share kind of risk here. And then it faded more because you had this reversal of the momentum based on the previous daily close. Pretty straightforward stuff. I'll go one more here. So looking at this previous daily close, again, you had this gap up here. This one was pretty quick. You just had this gap up, failure to go any higher from the previous daily close. See if we can get in a bit closer so I can show exactly what happened here. And you can see you had this first attempt where there's this wick here of it trying to hold the price above. You can see they stepped in, tried to hold this price above the previous daily close, and then you had the failure. You had the little bounce and kind of retest of this previous daily close area, secondary kind of retest, and then your big fade. So a lot of the time, these plays are especially effective on the short side because when things go red, that's where you'd often see a lot of panic selling. You see people going, oh no, the bull market's over, time to sell. So people start selling at a loss, you start taking out more stop losses, and the price gets driven down. So these red to green moves, these green to red moves, they're very straightforward because all you need to be doing is drawing a line from your previous daily close and looking to see the price throughout the day, how it reacts to that previous daily close area. Is it bouncing off it? Do you want to try and take a long if the volume's a bit lower and try and get a first bounce? And then if the bounce fails, you can start to look to reverse your position short, take some profits, and then as it breaks through, you might get a retest and you can start shorting. You can play these on the long and the short side. So that's the beauty of the red to green and the green to red. It doesn't matter if you're long bias or short bias, anyone can play these. You just need to be focusing on the previous daily close. The information's there for everybody. It's very simple. You don't need to be overcomplicating it with heaps and heaps of support and resistance lines. You just draw a line from the previous daily close and you work off that. So this is a very simple play. I strongly suggest you keep an eye on these. Before you start trading them, as I always recommend, try and notice these patterns happening and figuring out how you would like to trade them yourself personally, what kind of risk reward you want to use, and go from there. Add this one to your arsenal and see how you go. That's it.